G'day, fools. I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia, and welcome to another in our very popular series of Stocks in Focus videos, where we talk to you about the companies that are in the news, that are widely held, or simply that are worth chatting about. And there is no one better to chat stocks, particularly today's company, but just stocks in general, than Kevin Gandiya. How are you, buddy?
I'm good, Scott. Thanks for having me.
Mate, thank you for joining us. You are our Director of Research, of course. You're the man who makes things happen in the investing team here at the Motley Fool. So our viewers are very fortunate to have you join us. And mate, I really appreciate your time as well. We're going to talk about a company that shares the code. For those who've been investing for a very, very long time, there was actually a business that was called Email back in the day. It wasn't email as in email. It was just called Email. It now, of course, the code belongs to a company called EML Payments. And it's not quite your father's payment company. It's a business that does business in a whole lot of different ways and is poised maybe to try and revolutionize, like everyone is these days, the financial payment system. Tell us about EML Payments, mate. What exactly does it do?
Yeah, so EML Payments, the ticker is EML, listed on the ASX. This company is a payments processing company. Now, I understand if someone's listening to that, sounds pretty boring, sounds pretty like an uneventful thing to think about, but it's actually a very large market, this payments industry. If you think about just the way we buy and whether it's goods or services, just as we go about our day-to-day lives, most of the times we're starting to use more and more of cards that are in our wallets or even on our phones. So anything pretty much that we pay for using anything other than cash, there's a payments company in the background actually processing those payments to make it all happen. And guess what, Scott? They're usually clipping the ticket on those payments. So basically taking a small cut, a small commission for the privilege of processing those payments and making it all happen in a short space of time. And that's flowing all to a whole bunch of payments companies. So EML Payments is one of those companies. I think just to sort of set the scene for what payments processing is all about. I think the big behemoths that most people have heard of in this industry are obviously Visa and MasterCard. Full disclosure, I own shares in Visa and MasterCard. And those companies really target the very, very large payments industries. So they payment networks, they were formed by the big banks in America, basically to create, because when we're buying and selling goods and services, I may be using CBA, you may be using ANZ, and so there has to be a way for all those banks to interact with all those payments and actually process those transactions very quickly. So they created these networks, Visa and MasterCard, and so these companies really thrive on large payment volumes around the world. But there are some small corners, what EML calls payment programs or verticals, that are just too small for Visa and MasterCard to really care about. And this is a company that's really building its business by targeting those corners, those small areas of the market that are just too small for the big companies to care about, and building a payments a company out of that, a very much a global payments company out of that now.
It is extraordinary, mate. You think about payment platforms in general. I think Visa, MasterCard, Australia's own FPOS. You've got Square. I mean, Afterpay itself is its own payment platform of one description or another. They're really, and there's so many different versions of it, right? So many steps in I mean, effectively, the banks are payment processors as well in their own small ways. It's all the plumbing of the financial system that we don't really pay attention to daily, right? I take a card out of my wallet. I trust that card is linked in some form to my bank account, either directly or indirectly when I pay the credit card bill. I tap it on a machine. That's at a retailer. They're linked to a payment processor. Maybe it's a bank, maybe it's Tyro, maybe it's Visa or MasterCard themselves. It all kind of works. And it works really nicely. And we probably don't pay enough attention to that sort of stuff. I'm old enough, mate, you're not, to remember a time I went to the America for the first time. I had to get American Express traveler's checks. I literally took my money to the bank. They gave me a paper American Express traveler's check. And when I went and bought a pair of Oakley sunglasses, and that's just to amuse the people who are old enough to remember Oakley sunglasses, I gave them my traveler's check. They gave me some change. And that was how it was done. And these days, you throw a credit card on Amazon.com. I own Amazon, shouldn't have used that example. Throw a credit card on eBay or whatever it is. It's done so quickly, almost automatically, seamlessly, you wouldn't know it's happening. But yet, as you say, because it's so big, because the opportunity is so massive, the niches that are left are still potentially enormous, right? And I guess this is the email opportunity is, a fraction of a percent of global transaction volume is more money than you and I will see in a lifetime. So it's not nothing. What is EML's product specifically, mate? How does it go about adding its value in the payments processing world writ large?
Yeah, very, very good question, because EML has really gone about trying to build up very different verticals to create, I guess, a payment platform that's quite diversified across those different verticals. So this company started off processing payments across gift cards. So, if you go to a shopping mall or to a shop and you want to, I guess, get a gift for someone's birthday or Christmas, and you can just give them that gift card and they can pick whatever that they want from that store and just pay it with that gift card. So they're the company that actually processes a lot of the payments that are paid through those gift cards,
Right.
and it's just one corner or one part of their business. And over the last couple of years, they've been really diversifying their business away from that. So they still process those gift cards in a segment that they call gifts and incentives. They also have what they call a general purpose reloadable, that's a mouthful, segment. So if you think about gift cards, those are really just one-time payment
Right.
opportunities. So if I buy you
A
a
Bunnings gift card,
$100 gift
$20 for
card.
your birthday. Yeah, right, right.
Correct. So if I buy you a gift card and you spend that, and that's pretty much it. You can't reload that card. So what they've been doing is looking for different payment programs where there's opportunities for those cards to be reloaded over time. Obviously, that creates a recurring revenue stream. So one of those verticals is sports betting. If you've got a sports betting account, obviously you may be winning, you may be losing, but either way, you want to find a way to load that account and actually be able to spend those winnings from that account. EML
Oh, okay.
provides the cards that you can actually use that are linked to that sports betting account, and you can actually use that card everywhere else where cards are accepted. Another vertical that they actually use as well is salary packaging. So if you think about salary packaging, basically trying to the companies that you work for trying to give you incentives or benefits that are tax advantaged, and you can spend those gift cards elsewhere. So EML can provide branded cards for those employers, and those employees can use them everywhere. They also work with governments around the world. In the UK, for example, for example, if you think about something like and EML, the government can actually provide you a card branded with their logos and everything else, but obviously the payments are processed by EML. They also going into other verticals like buy now, pay later. They process the payments there. They also process payments for cryptocurrency. So if someone has a CoinJar account and they want to spend their crypto in the real world using Australian dollars, but spending the crypto, EML can process those payments on a card. So they're just various different verticals of payments, obviously smaller verticals that just aren't big enough for a Visa or MasterCard to really care about, that EML has been grouping together into just one company and to create this massive payment volumes that they process year on year.
That's pretty cool, mate. So I'm going to assume here it's a scale game largely, but as you say, it's too small for the big guys to get into. I'm envisioning myself I could provide these sort of products pretty quickly. I imagine the FBOS network could do something similar, at least for Australian-based cards. So it makes some degree of logical sense as to why that might work. The sports betting thing is fascinating. So you're effectively spending, rather than your savings account, you're spending from your betting winnings, which is I kind of like that idea. I don't know how many people get betting winnings, but if you get them, if you're luckier than me, or maybe just better than me, maybe that's how it works. All right, let's move on from that, mate. Let's talk about the investment case itself. I imagine some of the risks and some of the opportunities do rely on the content we've just talked about. But let's go to the pros. If you're going to convince me to buy shares in EML Payments come first thing next week, what's the investment case? What's the bull case for buying shares in EML?
Yeah, so you're absolutely right, Scott. It is a scale game, and this company has been building out its payment volumes that are processed on its platform. So if you think about the business model, they charge a percent on each dollar of each dollar that they process on their platform, and they charge a percent which comes to them as revenue, and that percent can be as small as 0.1%, and for other payment programs, it can be as high as 6% for whatever is processed. So the higher the payment, the dollar value of payments that they're processing, they call it gross debit volume. The higher that number is, the more they are making in terms of revenue. So at some point, as that number continues to increase, they start to earn more, and that revenue can actually, the growth in that revenue can actually outstrip the growth in their costs, which leads to higher profit for the business. So it's really, really scalable. If you look at over the last 5 years, in 2017, EML had gross debit volume, so total volume of payments of around $4 billion. Now it's coming on $20 billion, which sounds like a high number, but it can really scale into large, large numbers. We're still saying these numbers are so small for Visa and MasterCard that they don't really care about targeting those specifically small niches.
Right.
So the company can really, really scale that business model. And that's one thing to look out for, just the scalability of the business model. The other thing is this company is going global. With its business approach. So it's got a presence in North America, it's got operations in Europe and also in Australia. So actually most of its revenue is earned overseas. So it's a very diversified business. So it doesn't necessarily just rely on what's happening here locally for it to do well. Also, it's quite diversified across payment programs. So we talked about shopping mall gift cards. We talked about cryptocurrencies, sports betting, salary packaging, just different verticals where it can earn funds. It also is moving into other niches like B2B payments. So these are payments made from one company to another company, whether it's a supplier or whatever the case may be. So digital payments made in between that. And companies, when they actually are transacting between each other, like to use these B2B platforms because it's much more secure. You can imagine an accountant sitting at a desk trying to pay a supplier. They don't want to necessarily log onto the bank account and just make those payments directly. It just creates a security risk. So they use these B2B platform EML payments to process those. So the diversification of different payment programs is really something that's quite interesting. There are new verticals that they're looking out for within the fintech space that could actually engineer a lot of growth for the business. So open banking is a buzzword within the banking space. Basically, the legislative framework is really trying to liberalize information for banking consumers, and that's really creating big demand for new age fintech companies like EML, who can come up with products that are very consumer friendly within that space. So it just has a lot of different ways this company can grow, whether it's just that geographical diversification aspect or the payment volumes increasing. So what's interesting as well is EML, with the programs they have signed with different companies around the world, doesn't necessarily need to do much more for it to continue to grow its revenues. So if a sports betting company like PointsBet, which uses EML, if they grow their business, it means there's just more volume of payments going through that platform, and that just flows through to EML. So its customers can actually, in a way, work for EML by just growing their own businesses, which benefits EML. So I think those are some of the main things that I think are really going for this company.
That's pretty cool, mate. I really like that. I'm reminded of, obviously, in early stage Visa or MasterCard, as they were getting more adoption by merchants, or maybe even, I remember Flexi Group, not now called Hum, not one of the coolest companies in the world, but they managed to grow right through the GFC back a decade and a half ago because they were small enough. They just kept signing up more merchants. And even while the economy shrank, they were simply just doing more business with people. And so you're kind of independent of the broader economic circumstance. And very much it's a case, as you say, of being relevant to those merchants or those businesses, those consumers who want to use these things, and riding that growth of the uptake of digital access, I suppose I'll call it more broadly, to money in those niche areas. So plenty of growth potentially, as you say. All right, you made a good case for that. I'll let you catch your breath. I'll let you empty your mind of all those bullish thoughts. Mate, turn cynic for me. Turn bear, turn shorter. Convince me I should sell my EML shares come early next week.
Yeah, so there are some risks that this business is facing. The first one I'd call out is probably a regulatory risk. Most fintech companies like EML are really geared for growth, but with growth comes a lot of growing pains. And one of those growing pains is financial services is quite a heavily regulated industry. And so some of these companies really don't prepare as well for just meeting all the compliance and regulatory requirements for that industry. So for example, they acquired a company called Prepaid Financial Services. It's based out in the UK and Europe. And this company had a subsidiary in Ireland that, prior to EML's purchase of it, ran into some big regulatory issues that are now starting to come into the surface. So essentially, the Central Bank of Ireland called out that they as well process gift cards, and one of the issues that came out was I guess some criminal groups were actually using prepaid gift cards to process some of their payments within their network. So they're really the Central Bank of Ireland is really calling out these fintech platforms to do know your client checks, so to really understand who is using their products, why they're using those products, and if that is legal or not. So just for them to conduct more detailed checks, anti-money laundering and counterterrorism checks as well. So some really serious stuff. Obviously, even though this predates EML's purchase of the company EML does own the subsidiary now, so they are responsible for making sure that those things are all done correctly. So they've been going through a remediation plan, making internal goals, their risk assessment frameworks, all like that. They've an independent board, all these they're based in Ireland, who can be held responsible by those regulators there in case something goes wrong. So regulation will always be a major risk for financial services companies, and I'd say particularly fintech companies like EML that just aren't equipped because they don't necessarily have the overhead costs, some cases, to just make sure that's all done. So regulation is one risk. Competition is another risk. With big market opportunities attract big competitors. So there's so many financial technology companies all around the world, startups, very well-funded startups, to the big players as well, who are all trying to get a slice of this massive pie opportunity. So just that competition is a real risk. EML faces competition from all around the world. And then another thing that's quite interesting is just technology moves so quickly. So there's a risk that this company's technology actually becomes obsolete. If you think about cash itself as a medium of exchange, is fast becoming in a way obsolete. And so these platforms could themselves become obsolete as new forms of payment come through. And also with that competition and obsolescence risk comes also the headwinds towards pricing. I think payments is one of those industries where it can become a bit of a commodity at a certain level of scale. So I mentioned the commission or the take rate that they charge on those payment volumes is somewhere between 0.1% and 6%. That's a very wide gap. So I'd imagine that upper range of 6% will probably have some form of pressure to continuously go down over time. So whilst there's a lot to like about EML payments, certainly there are some risks to look out for. And I think as well, just finally, just to call out as well, with the company based in Australia, trying to grow in Europe, trying to grow in the US, trying to grow across different verticals, trying to manage all the different regulators, trying to manage the technology aspect, trying to make acquisitions and integrate them into the business. There's just a big execution risk as well. There's just so many different things to manage for a small company trying to scale globally. So execution risk really is something investors should be looking out for, particularly as they report from period to period. We just want to see management continuously reporting good results and good operational execution, showing just demonstrating that good operational execution.
Mate, you did a great job of selling me on the company. Now you've convinced me I shouldn't be buying the shares, or maybe selling them come Monday if I own them. I don't. I should ask, by the way, do you own EML Payment shares?
No, it is a company that we do recommend, and we do own in a portfolio that I run at the full.
Beautiful, thank you, mate. I reckon you might have just let the cat out of the bag. I'm going to ask you now, though, given those risks, given those opportunities, where do you see the share price in 5 or so years? Do you reckon it's a market beater from here, or does the market show it a clean pair of heels? Does it lag the market between now and 2027?
Yeah, so I do think if you look at the last couple of months, the share price has come under heavy pressure relating to the Central Bank of Ireland issue. It is quite an important issue. So I think in a way, whilst it has affected the share price, it's good that the regulators are calling these things out, because we do want a business that's very, very sustainable and built to last. So we don't want a business that after it's gained all the scale and all these cockroaches start coming out of the kitchen. So we want it to be built to last. But I think it's hard for investors to understand whether that's the full and length and breadth of all the issues, or if there's something else. So there's some risks to consider there. But I think overall, when you look at the opportunity that this company has in terms of the way it can grow in Europe and scale its payment programs, I'm quite excited about its reloadable segment, as well as its open banking opportunities. They are actually even investing in some startups within that space as well. So there's additional upside that's not fully being priced in the current share price. I think when you look at that opportunity relative to where the share price is now, with regards to that Central Bank of Ireland, and management have been very transparent about what's happening, and they are going through a remediation plan, which they expect to be complete by at some point next year. So I think when you consider all those things, I think this company has a decent chance of beating the market. The way, as you know, Scott, the way we always look at it, just because we think this company can beat the market doesn't mean that we're going to put all our investment dollars into that one company. We do like to have a diversified approach to investing. But I think on balance, all things considered, I think this is a company that could beat the market over time.
Mate, that is a very thorough analysis. As always, as I expect from you, you're a gun analyst, and we really appreciate your time on this YouTube series. And as always, as you mentioned, I'm also glad you mentioned the fact that diversification is important. When we do these series, Stocks in Focus, Stock of the Week, we bring you companies we like, and we bring you companies that we want to talk about. And we want you to know that this is obviously in isolation, because we can't talk about every company all the time or entire portfolios, but we always want you to be diversified. And remember that is the key. The only free lunch in investing, as they say, is diversification. So, Kevin, I appreciate you bringing that to our viewers. And viewers, I appreciate you spending your time with us, as I appreciate Kevin giving his expertise. We know you can do a whole lot of other stuff other than watching this video, but we appreciate you spending some time. We hope you found it valuable. I'm sure you have. KG is a gun analyst, and we're very, very fortunate to have him, as I said. So all that's left for me to say is, on behalf of Kevin, myself, and the whole Motley Fool team, until next time, Fool on.